Welcome, folks. In this video, I'm going to share on how to get the daily bias. So, this is today's candle. This is the daily chart. So, today we had a bearish day. So, what could be first things first before anything? We had this. We think that we headed to the downside. So, mostly you don't need a daily bias to be profitable, but is a very common query as to how to get the daily bias. So it's so simple. So this is a daily chart for Audi USD, and as you can see, we had these inefficiency. These by classification, that's a liquidity, a volume imbalance. Sorry. So we having that. So this was yesterday's candle. This was Tuesday's candle. So on Wednesday it gapped down. So it left us this gap. So yes, we traded above it on Wednesday, but price will reprice to that. So as you can see, this is let me zoom in a little bit. We had that as a potential draw on liquidity for today. So we had that. So with that, we and coupling it with time gives you the daily bias. What could you be aiming for? So this could have been your target, the midpoint of this week, because we treat weeks the same way we treat gaps. So this week, the midpoint. So you take your fib, anchor it to the high, to the low, right there. As you can see, that is the midpoint. So that is a target whereby you could target from above here up to the that level, and eventually the low of this candle. So as you can see, these were quite relative. We had this low and we had this low. So this was a very good draw on liquidity right here. As you can see, they were quite relative. So we had that low and that low. We had the midpoint of this inefficiency. So that is the draw on liquidity. So having that, we must know that price moves up and down due to a few reasons. So we have inefficiencies, we have liquidity. So that is all that price moves, because someone went short right here. So they may have trailed their stop, because we are going to have a bearish day. It comes, take them out, and then continues to the downside. And as you can see, we did not take this low. So yesterday, so we had this run to the downside, taking out both lows. Then we had this retracement as we speak. So that is how simple to frame the daily bias on a daily chart. So if we head over to the 15-minute chart, if we head over to the 15-minute chart, so this is the liquidity, the volume imbalance, sorry. So we have that. So as you can see, we repriced back to that inefficiency right there. We spent some time meandering around that area, repricing and making that inefficiency efficient. So while we are up here, this is exactly at London Open. So we have time being on our side. So you couple whatever you see on a daily chart heading over to a lower time frame, you frame that using now the time, so the time of day. So as you know, London will always form the either the high of the day or the low of the day. So you must know if we are down here at 12, this line denotes the midnight opening price. So we have that candle. So extend that through. So for you to know what the daily bias will be, you must know about the power of 3. So the power of 3 is something like this. So we had this being the midnight opening price. That is where the algorithm starts to frame what to do next. So the day starts during the midnight opening price. It doesn't start at 8:30. It doesn't start at the New York Open or the London Open. The day starts during the 12 or the midnight opening price. This should always be on New York local time. So when you're having that, extend that through noting the midnight opening price. So we had these being the accumulation, and then we had the manipulation, then here we had the distribution. So as you can see, it was not clear on a daily chart as to what low to take or to aim for, but on a 15-minute chart, as you can see, we had these lows, these lows, and these lows, and eventually we had yesterday's low. And as you can see, we purged into that, and now we are moving to the upside. So that being said, another thing you can also couple it with that analysis is you take your fib from that high to this low, the midpoint of that. So we are in a premium. What was in a premium level, we had that volume imbalance right there. So we traded into that. So the lower time frames are subject to the higher time frame. So mostly you'll see the higher time frame levels being respected more than the lower time frame. So here we had that run to the upside, which was the manipulation, and then we had this distribution taking out that low, and eventually we had that odd low that this line denotes. So they are quite relative to each other. So we had that. So that is how to determine the daily bias. It's so simple. Just look to the left, what is to the left on a daily chart, and then now you can see whatever is to the left, use it to frame some entries, and also know some things like this dealing range. This is in a premium. We had that. We had something like this in the version fair value gap right there. You can extend it through. So this is quite so simple. It is so super simple. If you just spend some time looking at whatever the chart is doing, it becomes so simple. So, and then having time being your number one factor. So that's how to frame the daily bias, and also maybe go to a 1 minute chart and see how you could have framed those entries like there. So we had that. So this was we then took out this high right there. We then came again, ran up again, but our entry would have been in this fair value gap right there. So your entry, your stop be placed right above that volume imbalance, then expect you anticipate for a run to the downside, taking some partials right here, maybe below these lows, taking partials, trailing your stop to break even, and then waiting for price to play out. Also, you could have aimed for the midnight opening price as your draw on liquidity for partials maybe, and then hold on for your TP to get hit. So I guess that's it, and I hope you've learned something. So it only comes to you spending time in the charts, and also sometimes you don't need the daily bias. It's not a must, but if you'd like to maybe have, you should know that London will create the high of the day or the low of the day. So that's it, and I think I don't have anything else to add on to that. See if so also you can see right here we had this trend to the upside. We had these the same thing that we are talking about right here. So we had this volume imbalance, we traded into that, and also we had the midpoint this week. We could also use that, and then targeting the midpoint of this week, the low, we had that. So that is quite simple. That is how to determine the daily bias, but you don't need the daily bias to be profitable. You only need maybe a 15-minute chart and then a 1-minute chart for your entries. So until I talk to you next time, be safe.